Good evening, all. Ira Epstein with your Spider ETF wrap-up for a violent trading day, and I mean violent. It was Wednesday, or is Wednesday, January 5th, 2022. Okay, look behind me, a sea of red. One market, FXB, is up. I take that back. Uranium was up a little bit today, too. Okay, that was it. Everything else basically on the downside. As the Santa Claus rally, what did I say yesterday? I said I thought Santa had gone back to the North Pole, remember? Bingo, he's gone. The rally ended. Almost, by the way, textbook to what, I want to give this man credit, Yale Hirsch. His analysis back when he went back and did this decades ago, and he found out that from the day after Christmas until the second trading day of the year, it's a 7-day period, he called it the Santa Rally. It did it in most of the stock indices. Not all of them, but the major ones. The Dow certainly, the S&P did it. NASDAQ's been under pressure, and the Russell didn't do very well either. And you pay attention to that. You did get rallies in Apple and other markets, so they acted pretty good. But the FOMC minutes came out today, and it looks to me like the market was looking for a negative, for a reason to correct. I wish I could tell you that I didn't feel that, but I did. Why? Well, first off, the bonds and the notes have been adding yield, right? They keep climbing. That's a headwind to the stock market. We've been going up. It's a thin trading week still. A lot of people aren't back. And you weren't getting all the participation. Only the Dow was really holding together. The other indices were weakening on that. I didn't expect the S&P to weaken as much as it did, but it did. It threw in the towel today. That's what happened. So when we take a look at a chart like Apple, it's come up. Well, all of a sudden from these highs right through here, it just hit 182.88, and all of a sudden you're back to 180. Let's see, today's low, 174.67. That's a nice little break in the market. Down today almost 3%, down yesterday 1.2. So when you add it together, you're down 4 or 5%. Not enough to get worried about, but a trading top was up there, and you get to see that as we put this together. First, today's action changes the pattern. You had higher lows, higher highs. When you broke down today, you went through this number, 177.26, breaks the pattern. That is gone now. When we step over to the moving averages, well, for all practical purposes, you're back down to the 18-day average and fighting a battle against that. In Bollinger Bands, you tell me what this market did those 2 days. It was telling traders against the upper Bollinger Band. That's where a lot of pros take money off the table. And in retrospect, probably a good move. And you haven't had an embedded reading. You've been overbought in the market. You had lost the readings here, tried to get it back day one on Monday, day two. Today was the key. Were you going to re-embed? It takes 3 days to do that, and it didn't. If you haven't taken my enhanced Bollinger Band course, now is the time to go to the website. Take a look at it under education at iraepstein.com. By the way, before I get too far, I know you want me to continue. If you take your cursor and drag it up, remember we have a live webinar tomorrow. You'll see the icon, click on it, fill out the forms, and I'll open up the chat room. Or I call it a chat room, but it's a webinar. I'll open that up at 12:15 p.m. I will start promptly, Chicago time, Central time, at 12:30, and I end pretty much on the time, 20 minutes later. Send me your questions. How do you do it? When you sign up, you'll see my email address in there. Click on it, and I'll be certain to get them and read them. It's that simple. So that's what we think of Apple, all right? Momentum lost. Now it's a trading affair more than anything. XLF, the financial services. Well, you don't stay over a Bollinger Band more than 5% of the time, and you were stuck your head out. Now, yesterday, what did I tell you? I said if we're going to get a real breakout to the upside, we should be up today and close near the very top of wherever the day is, higher than yesterday. Well, you did all that, but you collapsed at the end of the day. No breakout. That's what I want to say. No trend. Overbought. Lower and low, higher high. Certainly see the bias is up, but that's about all that I could say about it. In Disney, the upper Bollinger Band is restraining this, and all of a sudden, did we ever get an embedded reading? So if you did, you have to have both these numbers over 80, and you do. So day 1, 2, 3. Perfect. So until the red line closes under 79, you're in a bull mode. The moment it finishes under 79, out you go. This is yesterday at 79.52. Game over. Just slightly lower today, not a big deal. But as far as I'm concerned, you cannot re-embed. You got to go through the whole process again of several days in a row staying over it. So the odds favor now that you're going to get back in and try a break to 150, 247. Am I bearish? No. I'm just looking for that pullback. When I look at Facebook, the meta platforms, I'm reading how they're pulling out of AR in different areas, in fact, today, and going, what's that all about? They were just spending years doing certain things. You got to read about this and keep your eye on it. What had you and I talked about just yesterday? I said, if this market gets any momentum going down and can stay under this, it could start targeting the lower Bollinger Band. I didn't know it would happen today. But that was what the chart said. The chart was certainly never bullish. It had lost all that a while back. When you come to the XLI, I think today was profit-taking day. If you take a look, you didn't quite hit that upper Bollinger Band yesterday, knocked on the door today, and embedded. Even though it's embedded, if you take my enhanced Bollinger Band course, you learn that profit-taking day today and a portion of that position, lose the red under 79, I'd be telling you to come out of everything else. Then the semiconductor, it hasn't been trending. There's really nothing to do in it. You're just sort of just doing one of these, waving in the market. Okay. Cannabis stocks right back to the lows. So that didn't last very long. And if you look at what really happened, you had a rally off this Bollinger Band that carried into the 18-day average. It fought a battle there, fighting, trying to get actually bullish. This is a sign, unless you get back under right here, the 1399 level. And if, watch this, it hit 1390. That ends the uptrend. If it's going to drop, and I don't know if it'll drop or not, it would be right here. Why don't I think to have an opinion? Because it's not trending. It's just a market that's wobbling around, and as it turns out, it did drop down to it today. Okay, I'm not one to think it's going down here. I just think that the Bollinger Band is enough, and I think the guys that had what other systems to get short probably doing short covering. Home builders, they rolled. They're bearish. Until today's high is taken out, I think that you have to be on the bear side of the market, looking at the possibility down here. These higher interest rates are scaring the heck out of people for the moment. That does not change the scenario at all, that homes are in short supply and people have money in the bank, and that interest rates, even if they go up, are not going to go dramatically higher. Most analysts are looking for the 10-year at most to be in the 2% range a year from now, with all the rate hikes that the Fed is talking. Keep that in the back of your mind. That's the 10-year. A lot of markets key off of that for mortgages and the like. You know that. So you got to pay attention to what that's doing. So I can understand the correction, but I'm not jumping out a window. That's it for the housing market. Nah. Not doing that at all. Energy did not give you the breakout. Again, to get on my method of charting, you need to close the top part of the day's range twice in a row outside of the Bollinger Band to say, okay, we have a breakout. Now we shouldn't get back under this low again. And on pullbacks within the band, you want to get aggressive on the long side. None of that happened today. The market is overbought. Didn't do it, actually closed lower. Bye-bye. GDX, the gold miners. Okay, I had one of my clients write me. He'd like me to cover this in these tapes too. Okay, I have no problem doing that. What do we have? Coming in, and the word is coming in, this is Tuesday. We have higher lows and a higher high. Resistance right through here. Are we embedded? So let's you and I do some counting. And the answer is going to be day 1, Friday, both numbers over 80. Day 2, Monday, day 3. So the market is embedded. So now you're looking to be a buyer at a key moving average that I have in my course, as long as the market, as long as it's not a deeply lower than the 3-day average of low where it's going to come in there. And if at any point you lose that red line under 80, pull your buy orders. Market went up first, gave everything up. Now, I wish I could tell you that I was not paying attention when it got up here. When it opened, we know that. It opened at near the highs at 31.71 to 32.02. That was where the market peaked. I don't recall where that average was, and by the time it got to it, had it lost the embedded reading. The odds are it did, because you were down so much today. The trend is now, dare I say it, down. Until you take out this high again, you're in a washout phase right now. Be careful. If you go all the way, if the market decides to get unglued, this is a possibility. More likely, it's going to play around that 18-day average. That's typically what happens for a while. Gold got up to what number? You tell me today's high. 170.92. What is the Bollinger Band top? 170.92. And bingo. I'm laughing at it because it did what it should. Now, gold, for all purposes, to me, lost its embedded reading at 79.09. And I said, watch out, you can't afford to be down again. And it wasn't. It rescued itself, and it had to have a big update today. Otherwise, the odds are the weight of this, the way the numbers work, is going to be down. That doesn't mean you can't have a big update. And I watched this one. And it certainly climbed back up beautifully as you were getting there. But that was still, no matter what, a come out of position part of it. And by the end of the day now, with a 66 reading, you're gone. Was that a terrible? No, you're down a little bit from yesterday, so you didn't really give up much, but game over for the time being. In the minors, you don't buy over upper Bollinger Bands, and now you're in danger right off the opening tomorrow of losing the embedded reading. Be very careful. If this market drops very much, you're going to lose it. In fact, steady will make you lose the embedded reading. I'd be very cautious here. I think the smart money is going to take something off the table. Copper. I was jumping up for joy today going, I have a feeling this is a profit-taking zone day in it. Was it ever? Was it ever? I had some friends calling me on that because they were in it, and I said, got to do what I teach you. And at the end of the day, you lost your embedded reading. The profit should have been taken there, and now here. Why? Because you're running into two key numbers. The 200-day average is a big number. It's an important number, and you've seen that before. Second, combine it with the Bollinger Band, and you have a resistance zone. It's rare that you just slice through it. Can you? Of course you can. Often doesn't. You got to play the norms, not for the one-time event that will happen. It's like playing a weather market. There is that time where the weather gets bad and it doesn't change. But if you're playing for that, it's a rare event. You know that. TLT, still in trouble. 3 days in a row under the lower Bollinger Band. You rarely go beyond 5. That does not mean on the 6th day you're a buyer. You know that you're not trying to be a seller is the big thing. And you know you're not trying to be a buyer to pick a bottom in this market. Why would anybody do that? Same in BND and AGG. I'm watching all those. Last, we're just drifting sideways here in the FXE. I don't think it's going anywhere for a while, and I think that's how you basically watch it. So I want to see you get into our webinar tomorrow. We'd have a lot of fun with it. How do you do this? Well, get a cup of coffee, put it on your desk, take your cursor tonight, though, move it up here. You'll see the icon. Sign up. Everybody's received the invites. I've sent them out 3 times, so if you didn't get it by now, you're not going to get it because you haven't signed up on our website to get something, or whatever reason you asked not to be sent anything. We get people that do that, and we stop sending it. You can also click at the bottom of our mailings, unsubscribe, like that. It won't come to you again. So you might have done that, but I'm giving you a way in. I'm Ira Epstein. You have a good day. Thanks for listening to my nonsense, and I'll see you tomorrow.